Hey, it's Pete. Have you ever bought a stock while day trading, watch that stock rocket higher, only to see it hit a brick wall and reverse lower? Look, we all know that's the part of day trading that can drive you crazy. But what if you knew the price before it reversed so you could book your profits into that brick wall of sellers? Well, in today's training, you'll find out how exactly to do that, why level two is ancient history, and what you should be using instead. Enjoy today's training. Post your follow-up questions in the comments below that video. Today we have Fausto Pugliese, the visionary behind Cyber Trading University. He boasts an illustrious career of one of the pioneering day traders from way back in the 1990s. He stands as a trailblazer in the realm of independent trading, seizing the burgeoning direct access trading technology in 1987. This guy has a lot of experience. You're going to really enjoy today's call. With an extensive reservoir of wisdom gleaned from hands-on experiences, Fausto commenced his journey at the grassroots, collaborating with some of the industry's most accomplished and proficient traders. Now, after dedicating a significant amount of time to master the intricacies and the discipline of day trading, Fausto embarked on a path of entrepreneurship, establishing his own company to impart his highly coveted insights. Now, his expertise has graced the screens of renowned financial platforms such as NASDAQ Trade Talks, Fox News, and CNBC. Fausto's accolades further underscore his prowess with the numerous victories in international trading competitions against the industry's creme de la creme. Notably, he also holds 12-time champion at the esteemed World Traders Challenge, which is really hard to do in real time in front of a crowd of people. Moreover, Fausto is the esteemed author of the book, How to Beat Market Makers at Their Own Game, Uncovering the Mysteries of Day Trading, a publication within Wiley's distinguished library. Fausto, welcome. I know we talked about it last time. We know each other for a long time. You were actually one of the first people that I learned trading from. I'm very privileged to say that. Welcome.
Thanks a lot, Pete. Thanks for having me. And it's great to see you again. And it's amazing what a small world this is. I tell everybody, always going to bump into people. You know, I've trained so many people over the years. They moved on just like you. I mean, and it's just great that you're in the industry and, you know, because we need more people like that. It is a very big failure rate. Just got to know how to play the game.
So what do you think the difference is between somebody who fails and somebody who has a shot? I know we talked a little bit before about putting in the work. Is it just a matter of putting it in the work, or is it a system? Is it a personality trait? What kind of separates this from I'm losing money to I stopped losing money and I'm breaking even to I'm finally getting to the other side?
Well, I think that's the initial thing that people do. They all want to try it, you know, and the problem when we started, you know, it wasn't that easy. You had to be licensed to do it. You had to go through a program. You had to get registered. Now it's just anyone can open up an account. So they say, oh, let me try it. And if I like it, then I'll go and learn from somebody. So that's like the hard part about it. You know, to be very successful in the trading, you got to do, I mean, definitely you want to, everyone should try it. And you're going to do it anyway. You're going to run your own IRA, whatever, or your fund, whatever. But you got to find a good group or style that works for you, and you got to start small. There's not something that you're going to, you know, if you're somebody that's desperate and need to make money tomorrow, it's not going to work out. You got to learn a little bit more of find a good group of people that trade like you, that you like to be around. It's like joining like a country club. You know what I mean? Like I was just talking to I had a professional golfer that's taking my class right now, and I always like to use metaphors, Pete. I was telling him, it's like, listen, you're a great golfer, but how many country clubs are you members in? He goes, a few. He said, well, why are you there? Because you surround yourself with good people and you learn from people, and that's how you're gonna learn. You can't just sit there and go out yourself and do it on your own. It doesn't work that way.
Yep. So I know that back in the day we did a lot of level two stuff. That was your specialty. Do you think level two is as important today for day traders, or even more important?
So level two has really been outdated since we started. I mean, level two, they changed it around a lot. You know, level two, it has a little bit of the features that you might need, like, you know, seeing like price levels and stuff. But mainly, you know, back when we traded, you were able to see what brokerage firms were on the bid and offer on level two. Now they eliminated. Now it's all ECNs. So now you're basically just seeing an exchange. So the problem with level two, though, is that you're only seeing what that stock is trading, you know, the best price is trading at that exchange, like on the NASDAQ or the New York or any of the ECNs. And that what I've been focusing more of my attention on that I've been teaching, which technology has been around forever, is Book Viewer, where you're seeing the total book, where you're seeing all the orders at every single price. And that's really the big difference. So level 2 is pretty much outdated. You know, that's why it's free and they give it to you. But level 3, I like to call it, it's not really that much more. And we'll show you a couple of slides on it. But it's a totally different ball game.
So I told you last time we spoke, I had a lot of respect for the fact that you've been in the business for 25 years. You got an excellent reputation. What makes you and specifically Cyber Trading University different that with all of the social media and everything that's going on today, and it's so easy to get a reputation put in the toilet in 5 seconds, you don't have that. You've been in the business a long time. I've seen you probably at every expo I've ever been to. I don't know if you do as much traveling as you used to, but what makes what you do different, that you've been able to last and have a good reputation with the plethora of places for people to post something these days? What makes you different?
Well, the difference between me and most people out there is some people are just basically influencers, you know, and they're just really good, and, you know, very good as marketers. I'm not really that type of a person. I'm more of a, you know, I try to focus on my trade. These people are experts at it. They're very good at it. You know, that's why you'll find people have, you know, how's this guy got 10 million followers and, you know, you don't, you know what I mean? I should, but I don't really care about that. I don't put my efforts. I really put my efforts to trying to just find people that really want to learn how to trade the right way. But as a reputation goes, I mean, I just try to focus on surrounding myself with the right brokerage firms, go after people that are really serious about it, and try to not deal with people that don't know too much about it, because they're going to have to learn the hard way a little bit. And I'd rather let them learn the hard way than coming out, you know, and just say, just teach me, Fausto, because they got to know what they're getting themselves involved in before they do. It's like going to school. It's like going to college. Like, how many kids actually go to college and actually fulfill what they went to school for? I think it's like 20%. You know what I mean?
I don't even know if it's that high.
Yeah.
Okay, so obviously we're in the middle of making new all-time highs again in the market as of the time that we're filming this. Economic data has been coming in this week pretty good. We already had GDP data. Today we had inflation data. Tomorrow we have jobs data. We're in the middle of earnings. It seems like the mega caps are carrying the entire economy right now, never mind the entire market. It used to be just the S&P 500. Now AMD and NVIDIA are up. Nothing's going down, at least not for any significant amount of time. You talked to us today about putting together stuff about CPI, the Fed, and earnings season. Why don't you give us a little heads up on what we're about to get into, and we'll dive right into it.
Yeah, I mean, like, listen, everybody's always like, unfortunately, the earnings announcements comes every quarter. So there's always going to be something new that's always out there. But I wanted to focus a little bit about it because we are having some really good market conditions. Some people thought that this was going to be a bad market with all the tariffs and, you know, new presidency and all that. But it's obviously, you know, as a trader, you know, we don't take things politically because that will crush you. You know what I mean? Yeah. Otherwise, I'll be out of business every 4 years. You know what I mean? So, you know, you just got to go with what's there, and that's how we take things with a grain of salt. But yeah, I wanted to focus a little bit on some of these stocks and show you, you know, what really went up. But the key of it is, why did they go up and why they continue to go higher? And the goal is where to get out. You know what I mean? Because that's everyone's biggest issue. You know, it's not about the winners, it's the losers, Pete, that people have to learn, you know, to control. And that's where I wanted to kind of show why we're going to be focusing something on the right of the chart, where most people always are focusing on what's the left of the chart.
Right. Okay. All right. So let's dive right into it. And you could take it from here.
Yeah. So basically, you know, you could see a little bit of the, you know, here's a opening. We're going to talk a little about the market and show you a couple of stocks. So let's just change the slide and show what we got there. Here we go. So we're going to talk about earnings session. So earnings, obviously, we're at basically the end tail of it. So when you get into earnings seasons, these are the couple of things they have to look for. Don't try to figure out like, oh, they're going to beat earnings or whatever. Just to give you everyone's a heads up. It's not about the number they came out with. It's the call they follow up with. That's why sometimes after hours, you see like, wait a minute, like Tesla, it didn't go anywhere. Then 30 minutes later, the thing just tanked, you know, or took off. Why was that? It's what they're projecting the second time around, unless they came out with some really bad numbers in the beginning.
Yep, actually happened with Netflix recently as well. Netflix actually beat on everything, and the stock went down.
Right. So it had a big pop, and they said, well, because they always what they always want to prepare, and they need to know what they're projecting a quarter. I always tell everyone this, that a company's going out of business every 3 months. People are, how's
So
that
true.
possible? Because they got to report. You know
Yep.
what I mean? If they don't report, the stock will get destroyed. You know.
All right, so it's earnings season. You're paying attention to the mega caps, the smaller caps. Do you have any kind of minimum criteria that you look at for a stock to be tradable to you? I know there's some people that trade low float stocks. Some people only trade market leaders. Where are you on that scale?
I like to trade things in a big percentage gainers and losers, and that are in the top 20 most volume leaders. So I'm not always just trading brand name stocks. You got to remember, when you do brand name stocks, you do it with the best traders on Wall Street. The stocks are very volatile. You probably don't know this, but when I teach my students and they start seeing what it actually looks like, the inside of the stock, they're like, wait, now I know why this, because they won't even be able to follow along. They're like, oh my God, the stock is moving so quickly. They're like, yeah, exactly. That's why we don't trade them. So the thing is, you want to risk the least amount of money as possible with the high amount of reward. At the end of the day, it's all about, it doesn't matter what you trade. It's about your risk factor. So there are some brand name stocks that are controllable that you can get in and out of them, but some of them are extremely dangerous. Even though they're going up, it doesn't mean you can get in out of them. And this from when you first got started. Like when we teach our students, 50% of the students fail just on not knowing what's a tradable stock. And what that means is, what's the size of the spread? What's the tier size? Could you even get it? Because sometimes some stocks only have tier size of 100 shares, and you're looking to buy 1,000, and I don't understand, why do you get all these multiple trades? Yeah. I thought I was paying this price. How did I get that price? So those are the little things that we kind of focus. The main thing when you first get started in trading.
I find it shocking how some new traders don't know what a spread. I'll mention that stock has a wide spread, and they'll be like, "What do you mean?" I'm like, "Well, it's in the program, but that's kind of one of those things. You have to know what the break to get. You have to know what the risk is. You just can't market in and market out all day. You're costing yourself thousands of dollars all day." And liquidity. Liquidity is very important too. They'll be trading a low float stock and kind of rein them in to get them to the point. Getting back to what you just said before about the downside is what you have to manage first, not how fast it can move in your favor. Because you think right now you have a bid there that you can get out on. That bid disappears. It's going down $3.
Exactly, it's gone. And the only reason why you're selling it because the bids are leaving. You know what I mean? So that's, I think, that's about 50%. I would say of the failure rate just in trading, just on that alone.
So earnings season kicks off. What's your process like? Let's say heading into the day. Last night we had Meta, Microsoft reported last night. Some other big earnings this morning. We got a couple more this afternoon. Apple, Amazon, and Coinbase this afternoon. What does your process look like prepping for the end of the day into the next day? What does that look like?
So a lot of the stocks, I would be my style, and when if I'm talking to people that are just starting out, what I recommend to do is be very careful trading earnings. I mean, usually you'll know, because what happens, the market closes at 4:00 Eastern. So a lot of people are gone, right? So volatility starts slowing down. So now you're kind of dealing, you're trading in the dangerous time, the period of the market. So it's going to be kind of hard to kind of comprehend. It gets very, very volatile. I mean, the swings on these stocks can go up $3, $4, $5 in a heartbeat. You could lose, you have 1,000 shares, you get crushed immediately.
Yeah, I've seen that happen. I've seen people make $5,000 during regular trading hours and give it back in 5 minutes because liquidity dried up.
Liquidity dries up. So I would wait. Starbucks was a very good example. They had, it's nice to see stocks that go into an open. So then when the market opens up, then you'll start seeing things starting to build and come into fruition. And then all of a sudden, what I could get to, what I kind of show is I will start seeing orders out there, where there's a lot of orders, big buyers right now, roughly between $90 and $91. You wouldn't see that too much in the after hours or the pre-market, but you'll see when the market opens up, because program trading kicks in right at 9:30. So that's when all the orders come in. Some people are like, well, how do you see program trading? Well, that's what I'm about to show you.
Okay, excellent. All right, let's jump into that. All right.
So regarding about the live markets, like I said, we'll talk about the live markets in a little bit. One thing I like to do when I teach my traders is I will go into the live markets. We run a professional trading room. I mean, Pete, you basically were in the trading floor with me at that time. I basically built that whole concept, and I built the whole thing online like that. So just let everybody know, at the end of this presentation, I'll invite everyone to come and see me live in the market, and you'll see the hundreds of traders in our room, you know, how they think for themselves, trade together, and everything else. Now, what you're seeing right here, this is what I'm trying to talk about, like with Meta. Earnings came out. If you were short the stock, you were screwed. Okay, screwed. I mean, and just like you said earlier, like let's say you chase the stock, you probably wouldn't have got the stock, and let's say you bought it at 770, you put an order at 700, which could happen, and then all of a sudden the stock drops at you, and you're at 750, you get out, you lose 20 points like that, and it bounces. So it's very dangerous. So if you're new, I would highly recommend don't trade earnings. You know, wait till the market opens up the next day, and then because once people start coming back, analysts start figuring out what they're going to do, and then you'll get a better of a trading range, because right now this is very, very volatile and very dangerous.
We do things in a similar way. We have a lot of people who the bigger question that we get on our side is, should I hold through earnings? That's really one of the biggest questions we get. And it really comes down to, we tend to use an in-the-money straddle for options to determine what the options market is expecting volatility to be. Because a lot of people are like, well, I have no idea how much it's going to move into earnings. Should I hold it? And we kind of reverse engineer, well, do you have a profit on it? How big is the profit, and what kind of volatility is expected based on the options pricing? We find that it's a reasonable way. Nothing's guaranteed or for sure, but it's a reasonable way to at least have a number. Like, if that does unfold, I'm okay with that kind of move. But generally speaking, if you're not in a position, we kind of do exactly the same thing, because we feel like, again, let's talk about this stock. Once it opens the next day, at least now you have a reference point to say that's the line in the sand where it started, and now we can use that as kind of like whether it's a support level or whatever you want it to be. But you don't have that as soon as the number comes out. It's just too volatile. You're not really controlling the trade,
and you don't want to be in that position in the first place. You know what I mean? There's so many other stocks out there, but I'm only bringing up Meta because obviously it's one of the fabulous sevens, and everybody wants to know a little bit more about it. I mean, listen, if you're doing more of a swing trade, it's a different story. Yep. You know, and then you're obviously trading a hell of a lot less. But as a day trader, you know, extremely dangerous.
Yep. Okay, so Meta popped and still going this morning. Microsoft, same thing. A lot of these AI companies are just spending money hand over fist right now.
Yeah, I mean, and believe it, a lot of them thought they were going to get crushed with the whole thing with AI, or, you know, like, and believe Meta's in a lot of different stuff. I mean, I don't know if you saw the Meta glasses. Those things, yeah. I mean, they're starting to realize they're getting away from Facebook. It's more an advertising. They're stepping into other stuff too. So Microsoft, all of them doing pretty well on it. But what you could see from these stocks is the swings are very, very big. You know what I mean? You don't need to go out there and trade a $700 stock, a $500 stock, because that's the reason why people say, well, I can't afford that stock. That's why I trade the option. You know what I mean? Well, if you want to be a good options trader, I tell everyone you should know how to be a good stock trader first, because the move in the stock that makes an option move. Yeah. So you see what the stock is doing, then you'll know why to trade that option. It makes a little bit
having no leverage through options doesn't work if you're not making good decisions in the first place.
Right.
So you have 1 minute charts up on these particular charts. Do you have preferred time frames? Like, what does your screen normally look like?
So I would a lot of the charts that we have, like I like to look at a default at a 1 minute chart, and I like to look at a yearly chart. And then if I need to zoom in a little bit closer, I could turn to a 5 minute. I could do a weekly, a monthly to see those bars. But usually I'll get a good ballpark figure of what's happening over the course of the day and what's happening over the course of the year. And I can always zoom in, zoom out if I'm looking at a specific, you know, support and resistance levels. But, you know, as a trader, what I do is I like to simplify it. You know, when people start getting a little too overwhelmed, they start adding all these indicators and all that, and they don't realize that these indicators, number one, they're invented by mathematicians. That's number one. Number two, the more indicators you have, the more you're going to think, the more delay you're going to be. So I just kind of like look at the chart. I see where support and resistance levels are, which is the left of the chart. And when I show you moving on, I'll show you how I teach the right of the chart, because it's what happens in the past is only indicative of what's in the future. And the future is where those orders in the past, are they there now, today? Because they're not, that past is not going to exist. It's going to break through those support and resistance levels.
Okay, so let's keep going. All right, so NASDAQ Book Viewer, as you mentioned before.
So what's amazing about this right here is I had to pay $1,000 a month when I first got started to get this data. Okay. Now you can get it for like $15 directly through NASDAQ. I'll give you everyone my email if anyone's interested in getting it. I'll show you exactly where to get it. And I have 2 videos that are 5 minutes long, how to download it, and also how to set the defaults. So basically what you have right here, Peter, as everyone has to understand, is you have a seat on the exchange. You know what I mean? Like, and just envision that you can go to New York Stock Exchange. When you look at those traders had tablets, this is basically what they're looking at. They're looking at the order book, and NASDAQ does about 50% of the volume of the stock. So when you're looking at that, you're basically seeing all the orders, seeing all the buyers out there. You're seeing at what price they're looking to buy it and what price they're selling it. It's basically a big chat room. Whoever's paying the most is up on top, and whoever wants to sell for the least is up on, is on the top of the ask. Whoever wants to sell it for more is down at the bottom. Whoever wants to sell their shares for more is down at the bottom. But you're seeing every order around the entire world and seeing what's out there.
So this is actually what level 2 was prior to all the electronic trading. Right.
And that's why I was telling you, that's why level 2 is pretty much outdated. This is what it used to look like. Now it doesn't. Now you're just seeing all exchanges. So when you look at level 2, you're seeing the exchange, but you're only seeing that first price of 227.28 and 227.39, but you're not seeing, all the other orders below it. And that's what you need to focus on, because 95% of what you're seeing here is worthless. The 5% is what you need to focus on, is what I'm going to show you in the next couple of slides.
Okay. Let me move that out of the way.
So here you have an example of, everybody's always looking for support. I tell everyone you're doing the opposite. Okay. Support doesn't exist unless there's buyers out there. Buyers make support levels. Sellers make resistance levels. So you need the buyers to make the support. So here you're looking at, Google, and Google went down and it was at a price right around 196. And you'll notice it picked a specific price right around 185. Why 185? Why not 180? Why 190? Is because when you work your way down that list, the biggest buyer of 170,000 shares looking to be bought at 185. And there are 81 orders out there that make up the 170,000. So that's not one person, that's 81 people around the world that make up that order. Now, what I teach everyone to do is I teach them how to aggregate it, because then you'll see 81 orders out there, which you don't want to see, because then you'll lose it. You know what I mean? So then you'll see the depth of book. But you could see that there's a lot of buyers at every price level, 200, 300, 700, 1,000, 2,000. 170 is a big order, and that's why that stock went from 185, it shot up to 196. So how do you not miss that bounce? Is by not knowing that big buyer's out there.
Do you combine chart patterns with where you see that, or are you just trading off the book?
I just trade off the book. I'll look at the pattern and see what it's in the past. Because let's say that there was a support level at 190, you could see for me, it just blew right through it, right? Some of you might say, I could see a pattern of a big support level at, 180, but it never got there because there was a big order at 185. So that's how it kind of changes.
So as a day trader using the book and making decisions, and let's just say buying at 185, what is your stop loss strategy? Because obviously we're not looking at a chart, so to speak. We're looking at the book. How do you determine how much you're willing to risk on the trade from a point perspective?
That's a great question. It's going to come up in the next couple of slides.
Oh, okay, awesome.
All right.
Okay.
We don't want to spoil it yet. Those are
okay.
breakouts. Those are breakouts that you're talking about. So
okay.
we'll get to that. Right now, I just want everyone to understand that there are buyers that make support, and like in this example, there's sellers that make resistance. So here you're looking at Boeing, and the stock was at 224, and after 11, 12, 1, 2 o'clock, it decides that it doesn't want to go higher than 230, and it drops down to 226, and you're trying to wonder, why 230? Some people might say, oh, it's a whole number. Some people are like, oh, it's whatever, it's my kid's birthday, whatever it may be. No, it's because there's a 47,000 share seller out there. Now, for some people, they might say, well, is that really a lot of shares? I'm like, well, it doesn't sound like a lot when you're looking at some orders out there. I'll show you there are 200 million shares at that price. But when you look at overall all the orders that are out there, everything's 3 digits at every price level. This is the only one that's got 5-digit number, you know, and there are 25 orders out there. So when you're out there and you want a game plan, to be a good trader, to have a game plan, you got to know where Wall Street is. That's why, like in my book, is How to Beat Market Makers at Their Own Game. Market makers are the traders of the brokerage firm. So if you want to know where those traders are, that's where they are. So, and I'm just going to tell you, you're not going to outsmart them, but you could join them.
All right. Some more examples.
So here's an example of PYPL earnings, you know, like we talked about, came out on it, and the stock is trending down. Now, Pete, stock's at 70. Is it going to zero? It could happen.
We don't know. Yeah, we don't know.
We don't know, but it could happen. But before it gets to zero, it's going to probably stop somewhere, right? So what could basically stop this stock from going lower? Buyers. Now, the problem is you don't see buyers on a chart. So, but you have a stock that's going lower, and some of us don't like to lose money, but there is a point in time where, you know, you're going to have to hit the parachute, or you're going to say, you know what, this is definitely the bottom. And the only way it's going to know the bottom is going to the next slide. So we got to find where that support level is. So we go to NASDAQ Book Viewer. We look over here where the buyers are. Boom. I see 186,000 shares, 16 orders at 770. Okay. So in theory, I'm going to be like, okay, well, I see where there's a lot of buyers and I'm right there. So I'm not going to sell it now after taking a loss. So that's really going to be my support level in theory. So when I change the slide, what did it do? It hit that support levels and went right back to 72.20.
So explain iceberg order. There's going to be a lot of people going to ask that in the comments.
So I came up with that word after watching the movie The Titanic. You know, so we all know it didn't really work too well for the Titanic. So you want to see these big block orders, these big iceberg orders. You know, when we took our Series 7 and a 63 license, a block order was like 5,000. So I call iceberg orders. That's a big order. And the thing about an iceberg, it's not what's on top of the water, it's what's on the bottom, right? That's how big an iceberg is. You know, you think it's, oh, it doesn't look too big above, but the bottom thing's humongous. And what happens, people don't see what's on the bottom. They're looking at the first level, it's on top, and they didn't spend the money to look on the bottom, and that's why they didn't work out too well for the Titanic. So you want to look out for those big iceberg orders.
So I'm going to look. I'm going to answer another question or ask you a question from somebody I know that's going to ask it. So it's called NASDAQ Viewer, but we looked at Boeing and we looked at NASDAQ stocks. I'm assuming that viewer is for all stocks.
It's for all stocks. So now, you know what happens in New York Stock Exchange. All of them are. You could trade New York Stock Exchange on NASDAQ or anything. They'll vice versa. It depends who. You know, it's universal now.
Okay, good to know. Just trying to anticipate what questions are going to come up.
Yeah, no, that's a great question. And you know what? I even tell you something else that people always ask me. You know, usually New York Stock Exchange end in 1, 2, 3 letter symbols, and NASDAQ were 4 and 5. That doesn't happen anymore. Now they basically took that away. That's how you always distinguish the difference between, oh, it trades on a New York, or oh, it trades on a NASDAQ. It doesn't work that way anymore. Yep. Yeah.
Okay, so PayPal found support at 70.70. And what do we got next here?
So finding the now let's find the resistance level on a stock on this one. SoFi had positive earnings. I mean, obviously, we don't want to give up a profit. You got a good run up. Stock is flying on you. You know, is it going to 1,000? Is it whatever? Listen, it's always going to test. There's always someone looking to sell. So you got to know where the sellers are. So the only way to know where the sellers are is you got to look on where you got to look on the exchanges and see, okay, we got to look on the floor and see, okay, where's everybody looking to sell? So when we bring up the book viewer and we see where the sellers are, I'm going to go into sell column and I'm going to work my way down there. And as I work my way down the book, I see there's 150,000, 53,000 looking to be sold at $25. So in theory, I'm going to be like, okay, well, a lot of sellers, that's where I want to get out. So
quick question. So we have shares and we have number of orders. Does more orders for that share mean more? So in other words, is it 9 people or 50 making up that 150, or is it more about the 150?
It's all about the 150. It's all about 150. Yeah, it's nothing because that you know what, that 9 orders, one of them could be 150. The other 8 could be 3,000. At the end of the day, it's a lot of shares to get through.
So I'll ask you another advanced question, which I'm sure you have the answer to. Back in the day, we used to trade on Island, and and the reason I'm asking that question is you trade on Island back in the day, you'd see one trading firm in New York City, everybody put 1,000 share order out at a bid. You think that you're hitting the offer, you got all the support on the bid, and something called spoofing happened where everybody would pull their bid. Does that not happen as much as it used to?
So NASDAQ bought out Island. Okay. That basically, what you're looking right there, that's the Island book, basically. Okay. So the way to get away from spoofing, that's why you aggregate the orders. But spoofing doesn't really exist anymore. It's illegal. If you get caught for it, it's a big, huge fine. So they stopped doing that. So, but like anything else, though, someone could cancel an order. I mean, you could change your mind, you know. But yeah, I mean, listen, I was involved in a lawsuit when I first got started. Back when I was a SOS bandit, we sued. There was $1 billion lawsuit. I don't want to go into the details of it. You could probably read up online, but we sued the market makers back then that they were spoofing on us. So they got busted on the phone, calling their other friend, "Hey, could you put a bid out there so I could sucker some day trader out there to buy it from me?" And you know, they'll bid up the stock and push it up, and you know, that's, like I said, it's huge lawsuits. So you don't really see it as much.
Shenanigans on Wall Street. Who would have guessed?
Yeah, right. Who would ever think of that? We've seen them all. Yeah, you know what? Listen, there's an old saying, Pete, if you're not cheating, you're not trying, right? Is that they say in sports? So, you know, there's always going to be shenanigans going on. You just got to know how to play the game and just know that they're going to do this, whatever it is. Like, but at least you have a fighting chance to at least see what's on the right of the chart, see what's going on. Because here you have SoFi. If you like the stock so much and you saw the stock was trading, oh, this is the next big thing since sliced bread. Boom, that goes from 25 down to 21. And that's how you convert a winner into a loser, you know? And you're wondering, like, and another thing, you're like, why did it go down so fast? And what drive it? Listen, who knows? Maybe that seller out there said, screw it. I'm hitting the bid. And he just whacked every buyer on the bid. And you see, we just showed you, maybe there wasn't 150,000 share buyer in the bid. Maybe they were all 100 share lots. You know, and and let me tell you, okay, you bought 100, you bought 100, you bought 100, and what happens? He's gone, and that's how you run the stock down. You know.
So you just mentioned some language. I want to make sure that we educate everybody who watches this replay. You mentioned hitting the bid. So we showed the offer where the 153,000 shares were advertised to offer. What does it mean to hit the bid, and why is that significant?
Hit the bid is like, so basically, like, let's say you put a limit order out there. You say you want to get out one price, but you're not getting filled. So then you say, there's a way you could just say, I want to go out at market. So what you're doing is your market order is going to a buyer on the bid, and it's going to sell to anyone that's on the bid price. So if you had a big block order and you start hitting that bid, you know, you're going to eliminate, you could only sell what someone's willing to buy. And unless he does something called refreshing, meaning let's say he wants to buy another 100, updates his quote, and you want to, I mean, there's no guarantee he's going to do that. You got to just take what you could view. You're going to assume that if you execute him, he's gone. And then goes to the next person and the next person and the next person. And that's how that stock tanks so fast.
Okay, so we had hitting the bid is the passive, is the active part of the trade. And we'll see that in time and sales as red, correct?
That's right. That's right. So, and that's another thing that, you know, that I'll show you in my trading room that a lot of people neglect is they don't look at the time and sales, because that's where the chart gets its data from, believe it or not, you know? It's a chart. The time and sales is every transaction is taking place. And that's how the chart gets its data from. And that's how that chart works. So if you look at the time and sales, you look at a 1 minute chart, you're 1 minute behind. You look at a 5 minute chart, you look at time and sales. By the time it calculates in time and sales, you're getting 5 minutes behind. So that's by the time
you filter out the smaller trades in time and sales. Do you do 100 above, or do you keep everything?
Depending on the volatility of the stock, you could set the defaults and you could eliminate them. You know what I mean? Sometimes you don't if it's a low float stock, but if it's a fast flow stock, you can, you know, a lot of these platforms now, you could say, okay, show me only things of 500 shares or 1,000 share lots. So it kind of eliminates it for you.
Okay. All right. So SoFi hit that resistance, the 153, and change was up at 25. That's a pretty big reversal. Good to know, obviously.
Yeah. Well, it wasn't resistance; it was a big seller. that's a,
Yeah.
that's what I tell everyone. Don't worry about resistance; we're at the seller. So these are the icebergs that I like to just mention. They're just basically big block orders. It's just a lingo that I use to tell everyone, boom, iceberg order at this price, iceberg order on that. And you can see that it's not that big up on top; it's on the bottom. So.
Obviously, large orders are relative to the stock's liquidity, right? Something might have a 10,000 share bid or offer for a really liquid stock that might be not that much, but for something that maybe does 1 million shares or less per day, that would have a different definition of an iceberg, right?
And that will make the stock extremely volatile. So if you have a stock that's a very low float, and we've seen that, spreads are going to get big. I mean, that's a conversation itself that I cover, but like I try to stay away from those stocks. But when you see some of these stocks that like, wait a minute, how's this stock up 400%, 500%? They're probably very low float stocks, and it's very easy to run it up that fast, and it also goes down twice as fast.
Yep. So again, I want to keep bringing it back to what you mentioned at the beginning of the call, which is managing the downside and liquidity. You have to know how your stock has liquidity at each price level. It affects size going into the trade. It affects size getting out of the trade. It affects how you're going to build the position, all those kinds of things. Risk is first. That's the number one thing.
And it's something I forgot to mention, it's all about, I always tell my students, you didn't make any money until you sell it, right? So, it's every trade's a business decision. So you got to think about it. What's the worst case scenario? Like your goal is you want to get into this deal, right? But what happens doesn't work out? Can I even get out of it? Can I even sell it? You know what I mean? It's easy to buy, but it's got to also be easy to sell. And some people don't look at it that way. And that's why some people get involved into a stock. And I hear people, oh, I got stuck in this position, I can't get out. Well, if you knew beforehand, you probably wouldn't have gotten it in the first place. And that's like trading 101 that we taught back in the day, Pete, when we were trading, that we always yell at a trader when we're there, like, why did you get into the position in the first place? I don't know. I read good news on it. That's great, but it doesn't mean you can get it. Sometimes they buy a stock and they run it up and don't even know they wrote it up. You know what I mean? And they're like, well, the reason why you ran it up because there was no one really selling it. And by the time you bought all the shares, you really want to cause the thing go up $1,000. So those are little basic things that you got to learn. What comes with experience, and the way you learn is by doing with small shares.
I agree. Small shares is the smart way to run your business until your business has some profitability.
Mm-hmm.
All right.
Yeah. So if anybody wants to get the book viewer, there's my personal email. Just send me an email, and just tell me, you came from Pete. So I know you watched this video, and I will give you my 2 videos, 5-minute videos. Listen, you can go to NASDAQ's website and you can buy it, but I'd rather you not, because number one, you're not going to know how to set the defaults. You're probably going to buy the wrong one. Okay. And you're not going to know what you're looking at. So, send me an email. I'll give you those 2 videos. They're 5 minutes long each. One's going to show you where to get it. And by the way, just to let you know, Pete, if everybody knows, the book viewer is $15. Okay. Right from the exchange. You're buying it. It's not mine. I don't work for NASDAQ. I'm not getting paid by them, whatever it is. I'm just telling you as a trader, everyone's always wants to buy platforms. You know what I mean? And everybody thinks like, oh, this is free, that's free, or whatever it is. And listen, when it comes to trading, nothing's for free, right? But nothing's really that expensive. So, you're going directly through the exchange. And if a brokerage firm does offer it to you, that's great. There's a lot of brokerage firms that do have it, but I always tell them, just pay the $15 for the month. You could always cancel it and just make sure it is what it says it is. So because you'll see it, because in real time, some brokerage firms might give you, 15-second delay. You never know, but that's real time right there. So, and then you can compare it. And if it is, just cancel it and do it with the broker, which I would recommend you do anyway. But you don't know that until you actually have both running side by side. So you got to beta test it.
Okay. And let's upgrade now to level 4.
So level 4 is pretty cool. So envision this where you have the order book, but now you could see it on a heat map. So now you could actually see how long the person's been out there. Did he add to it? Now you're having the bubbles right there, which are the time and sales. So you could see if they're buying or selling. So you can see if the trend's getting executed, not getting executed. And this is one of the great features I like to show people, which, we'll get to when you come to the trading floor, that we really take to the next level. Now, obviously, this costs more money to use it, which I don't recommend being willing to buy, because if you don't even know how to, ride a bike, why go ride a car, right? Right now, everyone's still stuck on taking the local transportation. You know what I mean? So once you start learning that, hey, you could drive your own car, and like, wow, this is pretty cool. I didn't know, I could do that, but people think like paying $2.50 to take the bus is a lot cheaper and safer. I'm like, yeah, try to explain that to a pregnant woman. You know what I mean?
Right.
I mean, like, sorry, honey, I can't get to the hospital yet because I got to wait for the bus. They're like, well, why don't you have your own car? Because you're too cheap. Well, trading there's an expense that comes along with it. You know that. And you get what you pay for. So before you start getting into some of these more advanced tools, focus on that.
So what is the size of the bubble here? Is that the amount of transactions?
So what's nice about the bubble is those are the big block orders. So if someone's really want to buy it and there's a lot of buying going on, the bubble will get bigger. That means there's a big demand. If there's if there's a red bubble and it's really big, that means everyone wants to get out of it, and that's going to drive the stock down. So you can see that this one has more of a pattern of a lot more green bubbles. I mean, there's a lot of transactions going off in the ask, and that's what's driving it down. But then when you get close to that $18.30, you can see there's a big resistance levels there. Orders started showing, and that's why it's starting to back off. So, but you wouldn't be able to see that on the order book, because it already passed. So that's what's nice about the heat map. You get to see it. I know people love charts like as much as we all do, and we all trade on charts. But now you can add it into the heat, add it into the chart.
And that's from the exchange as well, that you would get that through permissions?
No, this is a third-party platform. And what's nice about this is that it's aggregated more ECN. So NASDAQ is only one, right? There's about 10. So this is implementing EDGX, which is a pretty big ECN, okay? You could also implement like Archipelago, and everything, but everything comes with a cost. It's like $15 there, $15 there. Next thing you know, you could be spending $100 a month on this stuff. So instead of worrying about paying 100, focus on the 15, focus on the top, the most 50%, most active on NASDAQ before you start getting into all these sophisticated platforms. Yeah.
Let's get some, let's give some information on how to get into your community. First, let's talk about the book, though. I can't believe you wrote a book. That's just amazing.
Yeah, let me tell you, it was a pain in the ass to write that book. And Wiley came up to me. They're one of the most well-known publishing companies in the industry. I mean, it's not a self-published book. They wanted a day trading book. It's one of very few around. So being a market maker, I have some really colored photos, good examples. It's crazy, but the book's a little bit old now, but it's not as in technology-wise, because the technology that some of the people are seeing here for the first time, this has been around for 50 years. Even when you and I got started, you're bringing up, level 2. Level 2 is Book Viewer today, But yeah, it's a great book. And if anybody wants a copy of it, you could pay me $50 on Amazon, or just let me know you came watch from Pete, and I'll give it to you for free. I'll give you the PDF version. Just send me an email at Fausto@ctutrading.com, and I'll send it to you. It's a great quick read. Probably take about 2 hours. I wanted to do it on purpose so you guys could read it pretty quickly. I'll tell you it'll tell you the history about me and Pete, because I talk a bit about when we started back in the day in the trading firm, and how we evolved to where we are today, and how market makers play that game. So it's definitely a great read.
What's the number one thing somebody's going to take out of the book, or at least from your perspective, what do you want them to take out of the book?
That you got to be part of a team. You learn from other traders, and it's going to teach you how to be very disciplined. It's not about the winners, it's about controlling the losers, and it's all about having a game plan. It's going to teach you how to find stocks and how to stay away from the volatile ones, and it's going to show you just how to prepare to have a game plan. And that's what I think everyone's issue. You see, everybody's biggest issue, what I try to teach, Peter, is everyone wants to learn and tell them what to do, and that's not the way how to learn how to trade. The way you learn how to trade is you got to learn how to take losses. Losers, it's like a diet. You know what I mean? Like everyone's worrying about like losing weight. You know what? The way you're going to learn how to lose weight is you got to hire a personal trainer, and you got to get a nutritionist. But it costs money to do that. Trading's the same thing. You can't do this on your own. You got to surround yourself with good traders. You might have to pay some money to do it, but you know what? at the end of the day, it's going to pay for itself 10 times over. And then eventually, and it's not like you have to be committed to them. I mean, eventually, you're going to learn how to trade on your own, and just like yourself. I mean, we trade together, and you found your niche, and look where you are today. And that's why you're still here. But you know that there are people back when we started, they don't exist anymore, and once in a while they'll poke up and they'll show up once in a while. They want to get back into it, but learn it the right way, and don't try to prolong it.
So let's give some information on getting into your community, Fausto.
Sure. So if anybody wants to come into the trading floor, we started the first one over 35 years ago. So if anybody would like to get into the trading floor, just you take your phone, scan that QR code, or just do the ctu.co/trial for $9. I'll give you 1 week in our trading floor. We're not going to charge you anything more. We're not going to put you in a subscription or anything. The $9 really, Pete, is just to tell me that you're a real person or not. You'll be able to, you're going to talk to our staff. You're going to get all that access to the trading floor. You're going to get the watch lists. You're going to see all the hundreds of traders in the room. You're going to see how they think for themselves. So if you want to take it to that next level, feel free to do it. And if you're not happy, I'll give you $9 back. It's just the $9. I feel like, I could charge you more, but I could charge you less. I feel like when you have a little skin in the game, you'll take things a little bit more seriously. So it's a great little trial. And like I said, if you want, I'll give you, you get your money back. And as a bonus, Pete, I'll even throw it in there. If you do register and let me know you came from Pete, I'll even personally talk to you on the phone. Okay. Because you know what, you might want to have that conversation to say, hey, listen, I want to do this. I want to take it seriously, but you want to talk to the owner and this and that. I'll make the time for you, and how long ever it takes to talk to you. Because if you're serious at trading, and I think you got in you, I obviously want to talk to you about it. But I think that once people come in here, they're going to realize what's involved. And Pete, they're going to realize, like, wait a minute, you know what? I really thought I can do it, and like, shit, I really can't now. And now I know it. And I know I'm getting myself involved in. Maybe this is not for me. So it'll be basically the best $9 you ever spent.
What hours is your community open, Fausto, just so somebody has an idea?
So we open up the trading room at 7:30 Eastern in the morning. So we do a lot of pre-market trading. We do a live broadcast on YouTube, Instagram, TikTok, and on the trading floor at 9 a.m. So we do 30 minutes before the market opens up. We'll come up with a watch list. And when we do live audio commentary from 9:30 all the way to 4 o'clock. And then we'll do another afternoon meeting that will broadcast on all our social networks and in the trading floor at 2:30. Because there's two. This is a funny picture. I don't know if you remember this, but this is a cyber clock that we had.
Oh my gosh, I talk about that so often. Yeah, yeah, I do actually.
Okay, so so it's the best time to trade, the worst time to trade. It's our number one seller, Pete. I'll send you a new one.
That's funny.
I tell you, everyone, it saves you thousands of dollars. So it's because your most active times and worst time to trade. So usually the first hour and the last hour are the best times.
So let's finish up with something strong. So I'm going to hit you with both sides of the market. Let's say, what is the number one thing? Let's talk to somebody who's on the borderline, where they've been trying for a long time. In their mind, they say, I've done everything. I'm not losing money anymore, but I can't get profitable. What should that person focus on?
Well, first of all, I ask them who trained them. Okay, number one. Number two, I will always ask them what kind of trading are they doing. All right. So I will go back to the employee hiring stage. Okay. If you hired someone, Peter, and you know how hard it is to hire somebody, and now you put in the time, because now you got to take your time to train the person, and you're paying him after 2-3 months and he's not getting it. Are you going to still pay that person, or are you going to let him go?
I'd rather train with somebody I have that much training in. I'd probably have a window where I'd say, okay, we have this much more time. You should learn it by this point.
But if he's not getting it.
Exactly. If he's not getting it within a certain period. I think for me personally, I think there's stages of getting it versus not getting it, because I think most people float right over to, I'm not making money yet, but most people just learn their job in the first 90 days. Never mind, they're great at it. So I think there has to be stages of what they're learning versus not learning. Oh, and whether or not they're actually putting in the effort. And
that's my point. So you're managing the person, like you see he's putting the effort, like you'll know if he's ready. But if he's not putting the effort, he's not getting it, no matter how nice of a person is, you got to let him go, right? Yeah. You're not going to keep paying the person. It's money coming out of your pocket, and you need someone that's going to get it. Trading's the same thing. I tell everyone, listen, if you're not getting it, number one, you're probably a bad educator. It's not your style, or maybe it's just not for you, but you like the industry, you just don't get it. So you better off just changing and doing something else. Cause I have people come to me and they're like, I've been doing futures. I'm like, well, you're breaking even, maybe it's not for you. Maybe you got the wrong person that's training you, or maybe you got to learn from someone else, or maybe it's not your style. So that's basically what I kind of tell them, and that's okay to change. Listen, trading is about 70% is exactly the same. And the 70% is the psychology, the discipline, and that's basically it. 30% is just trading a different market. You know what I mean? That's really what it comes down to it. So if you got past the 70%, you could take that other 30%, trade a different market. You and I trade exactly the same. We have our patience. We don't get angry. We don't freak out. Just what it is. We know tomorrow's another day. We know we're going to lose. It's part of the game. We know when we win. We're not going to go out there and blow our cash and like, hey, I just made X amount of money today and blow it. You build up your account. But when it comes to different markets, if it's not working, you just tried something else. I mean, listen, look where you are today, where you came from. You're trading a different market. So that's where that goes.
So it's funny you mentioned discipline. I'll throw a quote out there. Everybody in my community wants to know how I got so disciplined, or how am I so disciplined all the time? And it really comes down to when you realize what it costs not to be, you kind of like flip the switch immediately, and you're like, oh my God, all those lazy decisions I made are the reasons I'm not profitable right now. And even just eliminating those unforced errors get you closer to profitability, which is what I want to lead to for the final question here. How does somebody know when to trade bigger?
So what we do here, when we do a lot of our coaching, we have like an Excel spreadsheet that's automated. So it's like a sliding graph. So we always tell everyone start off, first of all, get off demo mode. Okay. That's number one. You should be on demo mode for more than 2 weeks. All right. Demo mode is really just getting you comfortable with the platform. Start trading with one share. If you're not trading, like I have people like, if you're not trading, you obviously there's something wrong. That means you're trading too many shares. So if you can't comfortable trade 100 shares, trade one share, trade 50 shares. The idea, what you have to do is don't look at how much money you're making. Look how much you're up in points. Okay. That's basically what it comes down to it. If you trade 1,000 shares, you make 50 cents a day. 50 cents is a $100,000 salary at the end of the year. That's how you have to look at it. So if your goal is you want to make 50 cents a day, you trade 100 share lots, and it's all about points. If you're seeing that you're consistent, a couple of weeks, then you go to 200. Okay. Then, and then you start seeing yourself on the graph. Then you'll start progressing. Then you go to 500. Then you go to 1,000. Eventually you can hit your sweet spot. And I'm glad you brought that up, Peter, because me personally, I was never, and I'll tell everyone, I'm honest, I was never a big trader. I tried to be, and I lost. I tried to trade big shares, and when I do, I get nervous. I freak out. You lose too much too fast. I mean, like I'm trading, I'm going up and down 1,000, 2,000 every couple of minutes. It's a lot of money, for some people. And then what ends up happening, you trade scared and like, shoot, I got out. I could have made 20,000 on that trade, 30,000. And then you know what? It's just not me. You know what I mean? So you find your sweet spot until you can't do it anymore. And then you just back off and then just deal with it. But you progressively just trade little by little more shares. And it won't take you that long to get there, like anything else. Like somebody always asks me, how do you become a good options trader? I don't understand. I said, just buy one contract, see what happens. But and it was like, I'm not going to make any money, Pete. It doesn't matter about making money. Just you want to find out why you lost money, and then you learn from that. And then that's how you trade more contracts, So that's how you build your account.
Yeah, I think you just finished up with an excellent lesson. Is that a part of learning how to trade is learning what kind of trading business you're comfortable running? Because if you're going too big, too quick, you're constantly focused on your P&L. And actually, you're never even going to learn at that point because all you're thinking about is your emotions. And you're not actually paying attention to whether or not it was a good idea in the first place.
Yeah, one thing that we do in our trading floor too, also, Peter, is I don't like to talk about money. So everybody in the room is only you only talk about points. Like one student, like, I made 30 cents, I made $1.50 at 20. Because I have traders that start that are starting at 100 shares. I got traders trading at a few thousand. I don't like egos, number one. I don't like people bragging. Okay, I think it's insulting. Telling someone I made more money than you, and it discourages somebody that's starting out that they don't know how to contribute. They're like, I'm afraid to even say anything. And you know what? I have some new traders that are really good, but just when they get to that point, they can't trade that many. So try to keep things at a point system, and people like it that way. You know what I mean? You know, it makes you everyone on the same playing field, and that's how you and that's how you also know if you're in a good group too. You know me. We talked about it, and we know people in this industry. Anyone out there that flaunts that they're on Learjets, they got cash sitting on the table, showing off their Ferraris and Range Rovers. Those are the ones you want to stay away from. Those are the ones you want to stay away from.
So let's get this up on the screen one more time just to give everybody a chance. Hit that QR code and get that access. Fausto, a pleasure. I mean, just amazing. We met a long, long time ago, and we're both still here and still both have a lot in common. It's a pleasure to speak to you again. Thank you so much.
Pete, it's been a great pleasure too, and thanks for having me. And you know what? I'm just glad that we're all still in the business doing it. That means we're doing everything right. And I'm still going to be here today. I love what I do. I love trading. I know you do too, and I love it. And just keep doing what you're doing. And hope everyone's listening here. Just go out there and just find someone that is your style. And if it's not me, if it's not Pete, you're going to eventually find someone. But definitely try a few different people and see who you adapt to, and also the group around you. The people that are around you like. But don't feel that you're stuck, that you have to trade one style. Even if you spend a lot of money on it, it's okay. It's okay to change once in a while. It's a great business. But because you're going to be doing this for the rest of your life. That's the way it comes down to it.
Yep. All right, Fausto. Thank you so much. Thank you, everybody. Have an awesome day.
Thanks, Peter.